Welcome back to another video on the $2,000 to $10,000 challenge. In this video, I'm going to be covering trades 8 to 10 and also introducing another indicator I use to determine market bias. If you're new to the channel, make sure you check out part 1 and part 2 so you can see how I got to the 4,600 watermark. Also, make sure you hit that subscribe button so you don't miss out on any of the future videos. Alright, let's jump into the first trade of this video, starting off with trade 8. Alright, jumping into trade 8, this was a trade that was taken on a Monday right after the last trade that was taken on the prior Friday. The last trade I took was on the 15th and I did capture that in trade 7, which brought us to the 4,600 watermark. So this is going to be a trade that was taken on that following Monday, which was on the 18th of May. So this is actually a short play, another short play that I took on this day, and you can see that the SPY opened and retested that key level of 741 again, and we had some rejection. I didn't initially buy into this because I actually wasn't planning on trading on this day. However, the market did show some signs of continued weakness, and there was an opportunity that I saw that it was going to continue down to the 733 range. Being in a small account, there is the pattern day trading rule that we are subjected to, so I have to keep that in mind and make sure that I am abiding by that rule so I don't get a flag on my account. And when I went into this day, I did have the leisure of taking a trade, so I didn't want to let this trade go to waste. I thought there was potential. I did enter on this candle here around 11:20. Let's zoom into this. This is a 5-minute chart here, and we're going to break down why I decided to enter into this trade. Starting off here with the first entry of this trade, I did get in on this candle here, and the reason why I bought into this candle was because there was signs of weakness showing. Obviously we had the key level failing at 741, right? But then we're also showing some failure below VWAP and the 50 SMA. On this candle here, this is where I entered. We're showing some weakness with the break below the 200 SMA. So as this plays out, we're going to see that there was a little bit of fight that was going on at this range, right? So we have to keep in mind that the 200 SMA does act as a level of support. However, I believe that just the way that the SMAs and the EMAs were aligned, that we're going to continue to the downside. Now in the other videos, I've only talked about VWAP, the 50 SMA, and the 200 SMA. But in this video, I'm introducing the 9 EMA, which I think is a very helpful tool to include on any chart. Initially, I was being very cautious because if we go to the overall view of the market, we can see that that candle is actually testing right off of the daily 9 EMA. So I'm going to make a line here to mark that 9 EMA. And we're going to change this to green to match the color. So jumping back into the 5-minute chart, we're going to zoom in here again, and you can see that the 200 SMA on the 5-minute chart aligns perfectly with the 9 EMA on the daily chart. So this is actually a very strong area for it to hold. However, I didn't believe that this was going to hold. You're seeing the test at 741, and then you're also seeing a retest here, right? A bit of a flag forming here. It drops, you get this flag pull, breaks below, breaks out of that bull flag, it retests. See this high wick here. So if we draw a straight line now, you'll see that it actually retests on the bottom of that bull flag in that consolidation. That top wick there is aligning with a previous support area for that flag, right? So you're seeing some more weakness, and this is exactly where I was like, okay, I think this is going to continue to the downside. We have another break in the intra channel here. The overall channel that we're looking at is 733 to 741. We're continuing to get a lower low in this channel. We have a break above the 739 range, builds a bit of a consolidation bull flag, but breaks out to the downside. We have a retest on 739 before it breaks again down towards the downside, making a lower low. So now if I make another key area here in the intra channel, you can see that at 737 we're having another key area of resistance. So this is where this would be the more ideal area for me to enter rather than entering down at the EMA support level. So you can see that this did close at a green candle, so that's showing some demand coming into the market. So it's likely to see this push back up towards the 737 range before the continuation to the downside, and that is exactly what happened. So you can see this candle starting to turn green. We're starting to get that push back up towards the 737, and ultimately this is exactly where I should have been more patient for that retest, because we could see a inrush of volume at this point and have the price push past the 737 range, right? So if this breaks, retests, and then continues to the upside, well, this trade would be dead. And you're kind of seeing that there. This was a trade that I had a little bit of FOMO on, and I didn't take my time to fully analyze. I just kind of assumed that there was going to be continuation to the downside. Even though I believe that my bias was correct, I could have positioned myself a little bit better to maximize my profit, right? So again, we're going to jump ahead a little bit here and see exactly what happened, but that is the initiation of the trade that I entered, and I did jump into the 735 puts on this one. So we're going to see exactly how this played out and how I managed this position to ultimately end up in profit. Jumping back into it, we jumped ahead about an hour on this trade, and you can see that that actually played out exactly what I was saying about volume coming in and pushing it back above the 737 range, right? So this is why it's important to stay patient when you are getting into a trade, because it may look like it's going to continue into the bias that you're deciding to trade against or trade with. However, there could be a retest on a level or even a break past the level of resistance or support that you're looking at. So in this trade, we see that I did enter right at support, really at the 736 range, and there was a little bit of a sell-off below, but it wasn't enough to take any major profits. Volume came back in with this candle, this engulfing candle, and ultimately the price was just kind of oscillating in between the 736 and the 737 range before we had a breakout above the 737.20 range. And you can see that it's going to, or at least it's trying to retest 50 SMA in the VWAP. As this plays out, you can see that there is some more volume that's going to be coming in here. And at this point, I was anticipating a test and rejection at the 50 SMA in the VWAP area, because these SMAs act as a level of supportive resistance. When this candle broke out, I actually added to my position. So this is another area that I added more contracts to my position to average myself down. So right here is exactly on this candle at 12.21. I added more contracts. Now I'm in this trade for 65 contracts. So I'm just about all in at this point, right? I believe that this was a good decision because there was obvious resistance areas that were likely to occur. There was the 50 SMA, there was the VWAP, and I didn't believe that this area was going to hold. So I took the risk and I averaged down. Although my bias was to go short, I didn't want to maximize my risk potential on this trade. There was no need to continue to hold a position that wasn't going in my direction off the bat. I already positioned poorly. I have to accept that and own it. I want to position myself in a way that I can still make out on top and also reduce risk at all costs, because this is a small account challenge. You do not want to go negative, because the losses when you go all in can be pretty significant, and the profits can be pretty small sometimes depending on positioning. So it's important to minimize the downside swings as much as possible. So once this decided to go in my favor, as you can see that there was a major sell-off. It didn't test the 50 SMA exactly, but you could see that there was some rejection above that level. This candle was not holding above the 737. So I actually closed this trade out pretty fast after I averaged down. I wish I held a little bit longer, because this was a clear indication that it was going to continue to the downside. However, with being in this trade with my whole account, I did not want to hold on to that risk any longer than I needed to. And I was able to make out with a $575 profit. We did start with a watermark of 4,600, and at the end of the day, we did close the account at 5,000. So we are increasing slowly but surely, and I was very happy with just the overall outcome, just keeping my composure, averaging down even though the situation didn't look the greatest. I did bite the bullet and average down based on the 50 SMA and the VWAP acting as resistance. This is basically the end of trade number 8, and we're going to jump into trade number 9, where a similar situation happened where we were averaging down and we were trying to keep our composure, keep our emotions in check, and trying to make sure that we did end up with a W. So let's jump into that trade and we'll see exactly what happened there. All right, jumping into the next trade of the challenge, trade 9. This was a trade that I decided to go long on. So we can see that the price did open up below one of our key areas. We were looking at the daily 9 EMA, which is marked with the green dash line here. And then in the intraday, you can see that aligned almost perfectly with the 50 SMA. So this is exactly the candle that I decided to position myself to go long on. So I did buy the 738 calls on that day, and I was just looking to see a break above the SMAs, the EMAs here, along with the continuation and break above the 737 key area, which would be acting as resistance. And then if it broke above and then retested, it would be the support, bounce, and continuation up to the upside. So I'm going to mark this here just to indicate that this was a candle that I decided to position myself in on those calls. And since this is a daily EMA, it was very likely that this was going to occur. The market has been overall very strong. We've been seeing a continuation to the upside, and to recapture this EMA, I thought was very plausible, right? So that's exactly why I decided to go long. Now, my anticipation for the continuation to the upside was a little bit early, and again, this is another trade where I should have waited for that confirmation, that break above those key areas to position myself, because what happens when you trade zero DTEs is the time decay eats away at your position, right? So if you position too early, you can actually end up losing or even breaking even on your position, because the time decay of those contracts just diminish so much, right? The value of those contracts diminish so much that you're not actually seeing a good profit. That's why it's very important to position yourself correctly when you're entering into options. I did position myself quite light in this trade. I only bought 5 contracts at a 130 price point. So we're going to jump ahead a little bit here and see exactly how that played out, and if we did get that break above those key areas for that continuation break above the 737 range. Okay, jumping ahead about 10 minutes or so, you can see that actually did reject off those key areas, right? So we're seeing the rejection off of the 50 SMA in the intraday, and we're seeing a rejection off of the daily 9 EMA. It's very important to keep in mind that those act as levels of resistance or support depending on which side the price is on. We're seeing that test at the 737 range, rejection, and then we're seeing some oscillation in between here. It's fighting. We get a doji candle, almost like a hammer candle here at those moving averages, and then it decided to sell off and continue to the downside, right? So now we're testing the 200 SMA on the intraday here. Actually, this is a candle where I was really skeptical on the continuation to the downside. I thought this was going to be a bear trap, and I didn't actually believe that this was going to continue to the downsides and sell off. And the reason being was, when you look at the daily chart and you compare it with where the 9 EMA was with some of the other indicators that I used, I didn't believe that this was going to continue in the downside. If we look at the RSI on the charts here, you can see that they're oversold, and the price didn't seem like it was going to continue to the downside. This is typically where, when you have an oversold chart and the price is nearing the 200 SMA on the intraday, and there is a clear indication that there is a bounce that's going to occur here soon, you're going to see an inrush of volume occur. And I think that's exactly what's going to happen here. So when the price decided to sell off down towards the 200 SMA on the intraday here, I decided to add another 5 contracts. Again, I was not in this pretty heavily, so I was able to leverage my account size with the position size that I had. So adding another 5 contracts on this candle here, I'll mark that, and then we're going to see exactly how this played out. This was not a long trade. This was only a trade that took me about 20 minutes to finalize, and we're going to see that the price did go down a little bit further, tapping that 200 SMA, and you're seeing some buying pressure starting to show up, right? We're starting to show a little bit of a hammer, and we're going to see a little bit of a bounce here. After averaging down on this second candle here, adding another 5 contracts, I did average my position from 130 down to 113. And we were just looking for that bounce off of the 200 SMA, break above the daily 9 EMA in the intraday 50 SMA, and pushing it past the 739 range. Now, again, we're in the 738 strike going long, and we're currently in with 10 contracts at this point. Again, I was just looking for that bounce, and it looks like some volume is coming in here. We're seeing the price action kind of bounce off of that 200 SMA, and we're going to see a retest on the moving averages above the price action here. So if we can break above these 2 price actions, then I would say that this is going to be a solid trade, and we're going to see some major profit here. Okay, jumping ahead about 15 minutes, you can see that right after I did add and average my position down, we did get a little bit more of a sell-off down towards the 733 range, but it ultimately did recover, and we had a major surge of volume come through, pushing us past the 9 EMA and the 50 SMA and retesting the 737 range. So we're averaged down around this range here. The price shoots up, we're in profit, right? So this ended up going from the 113 average down position that I had well past $2 on that contract. I did offload this position at $215, so I did make a significant profit on this, and I believe this was a $1,020 profit. I'll have the screenshot here. However, this turned out to be a great trade overall and a great read, right? So we were just looking at the overall market based on the strength that we've been seeing in the markets, and we looked for that retraction, that bounce. We averaged down. We waited patiently for that bounce. Even though we didn't position right at the bottom, we still were able to profit and capture a win. So I ended up offloading my position at this candle here when we did break above the 737 range. So I was able to maximize my profit potential there and overall just have a great day in the market. We did have this trade last about 20 minutes. So after this trade was over, I just closed the charts and enjoyed the rest of my day. There was no need to look for another trade. On top of that, with the Pt.3 rule that is currently still in place on Thinkorswim platforms, I need to be very selective with the trades that I enter and exit and make sure that I am spacing my day trades accordingly so I don't break any rules and I lock my account out from continuing this challenge. With that said, I'm going to jump into the next trade, which is going to be the 10th trade that we're going to be covering in this video to see exactly how that played out and where we ended up with the challenge. Also, before we get into trade 10, I did want to mention that the Pt.3 rule did get overturned and that's going to be going away. So there's not going to be any more restriction on the amount that is needed to trade daily. Charles Schwab's did not update their platforms yet to include that rollout, so we're still waiting and we're still working with the Pt.3 rule in the meantime. But there's going to be more on that later. All right, let's jump into the next trade. Up to this point, I have been able to bring this account from $2,000 to $6,000 in just 9 trades. This trade here that I'm about to go over was insane. I actually did not anticipate this at all. However, the way that it played out, I'm not going to be mad about it. So let's jump into it and let's break down exactly what happened and how I dealt with the adversity throughout this trade. Okay, jumping into trade 10, I'm going to go over a little bit of a precursor here to understand exactly what happened in the market this day. So this was on the 22nd of May, and we're seeing that the price had skyrocketed from the previous days, retesting all-time high. This red line here is going to be our all-time high 749 key area. When the market opened up this day, we're seeing a lot of pressure push towards that range. If we look at the intraday 9 EMA along with the VWAP, we're showing significant pressure to the upside. So this is where I decided that I was going to go long. Now, this is not ideal because we're trading in between a channel here, right? So there is a potential for this to sell back down towards the 746 and also retest on the 50 SMA. If I position too early and that were to happen, then my contracts would decay significantly. So now let's look at this. So at 10:02, I decided to position with 30 contracts with the anticipation of it to go to the upside and retest the all-time high of 749. So the strike that I bought in was 749. So this was the candle that I entered in, hoping for a retest and bounce on the VWAP. So as you can see that play out, we're seeing some selling pressure enter the market and it's just not really going my favor. This actually decided to sell off down towards the 746 range. So I'm up towards the 747 range when I entered. And again, this was not ideal because I did enter a little too soon. However, there wasn't enough information for me to believe that this was going to continue to the downside. I decided to position pretty heavily with 30 contracts at the 69 price point. So now we're going to see that kind of unfold and see exactly what happened with this price point here. So jumping ahead about 20 minutes, you can see that this is not going in my favor whatsoever. So I'm already in about 30 contracts and you can see that I got in really early with this trade. We're at the top here. It sold off, retested the key level of 746 and it broke past that and now it's going down towards the 743 range. So I am very deep in the red at this point. There's nothing that's going to really save me unless I decide to average down, right? So this week consisted of a lot of FOMO. This week consisted of a lot of poor positioning and just being impatient when entering the market. However, I did believe that all my trades that I took this week were correct and they're proven to be correct, but it's just that I'm entering them too soon. So what's going on there? So that's something that I need to work on. However, when this broke below our key level of 746 and broke past our SMAs on the 50 and the 200, I decided to buy more contracts. This is exactly the candle where I was deciding that this was going to be a bit of a liquidity sweep and looking for that bounce to try to average myself down enough so I can position myself to gain some type of profit. Now, I'm not looking for a huge home run here. I'm just looking to average myself down enough where I can still make a profit on this trade. So at this point, the contracts are now worth about 30 cents. So I'm in up here at 69 cents. Down here, the contracts are worth about 30 cents. So I decided to add about 45 more contracts to my current position. So now the time is about about 10.23, and we're going to see how the price reacts to this recent sell-off in the market. Now, are we going to get that retest? It's hard to say. I mean, we're really deep in the money here. We're not really showing any signs of an upside. At this point, it's really just about risk management, and I'm looking for that bounce at any range here. The next key area that we would be looking for a bounce would be the 743 range, right? So you may be asking, well, if that's the next range, why didn't you wait for that bounce there? And the reason being was we're already seeing a significant amount of sell-off here, but we're going to jump ahead and see exactly what happened. Okay, jumping ahead about 2 hours in this trade now, we see that after I averaged down with another 45 contracts, we did recover off of that 200 SMA, recovering the 50 SMA, and then ultimately recovering above that 746 key area, which is huge, right? This is a very huge indication that we're going to see some more upside. So we break above, we get a test hold on that candle here with this hammer candle, and then it continues to the upside. So this is a very huge indication that we're going to see some upside. I'm already in so deep, and with these areas showing significant signs of a continuation towards the 749 key area, I think I'm going to go all in at this point. So that's exactly what I did. So on this candle here, we're seeing a retest on the VWAP and the 50 SMA. We're also seeing, like I said before, a hold above that 746 range. So on this candle, I decide that I'm going to go all in at this point. So I add 50 contracts at 39 cents. At this point, I'm all in with 125 contracts sitting around a cost average of 46 cents. If this decides to go in my direction, I will make out massively. I have $6,000 in this trade right now. So if we can get a push past the 748 and up towards the 749 range, we can see a massive increase in our account. So what I'm looking for is just that break above the 748 and a hold, a retest, and push towards that 749. So this was a very slow moving trade. This required a lot of patience. And honestly, with the amount of money I had in this trade, it was very stressful. I'm not going to lie. Emotions definitely were high. I did not keep my composure well, but I was just trying to think logically on what was the most logical outcome of this trade based on what the indicators were showing. If this were to sell off, it would probably retest that 746 and then continue to the upside, worst case scenario. In this instance, I would think, I mean, of course it could break below that and then continue to the downside, but it just did not look like it was going to do that. So at this point, that's why I decided to add more. Okay, jumping ahead about an hour, we can see exactly how this played out. So we did get that break above that 748 range. The initial buy-in with 30 contracts, we thought that we were going to see a push above based on the hammer candle here, a close above the VWAP, and a close above the intraday EMA, and we ultimately did not. It failed, and that's when it broke below the key level of 746. So this is where it turned from trying to make a profit and push past the 748 range to a risk management reversal. So this is where I added another 45 contracts to average myself down and position a little bit lower in the strike price that I was in, which was the 749 strike price. So now we're down here and we're looking for a break and retest at this area here. So once we did get that break and retest, we did see that that candle did close, and it closed in a hammer candle, so that's a good sign. The following candle was another smaller hammer candle, but it did close above, which is another good sign, right? So you want to look at how the candles are reacting, because that's going to determine how the buyers are reacting to the price point that it currently is at. So we're seeing a hammer candle form with a close above our key areas, and followed by green candles that take place after that. So now we're breaking above that VWAP, we're testing towards the 748 range, and we're just kind of oscillating in between here, holding above that VWAP and just trying to see exactly how this is going to play out. We finally did get that final test on the VWAP and the 50 SMA before we get a huge surge of buying pressure, pushing us past that 748 mark. So at this point, the contracts went from 30 cents to 80 cents. So that was a huge change in price on the contract, especially being all in at this point. I decide to offload at this point here. I don't care if it breaks, retests, and continues to the upside. I'm already in profit. This was a crazy long trade that I did not anticipate to be all in it. It turned into be a very high risk management trade where I wanted to just get in and get out. And I was hoping that it was going to be about 15 minutes or so, but it ended up turning into about 3 hours I was in this trade. So it ended very well for me. I was able to go from an average of 46 cents all the way up to 70 cents is when I closed my position out. So I did close this out with about a $3,000 profit, and we were able to bring this account from $6,000 to $9,000, bringing us very close to our goal mark. So we were very close to closing this challenge out, and this was a trade that really put us towards that tail end of the challenge here. Although this ended in my favor, it was a very high stress and very emotional day to trade in because of just the duration of this trade. With that said, we are currently sitting at $9,000 in this account. We're getting close to the end of this challenge here, so I would anticipate that at least 1 or 2 more trades is going to put us over that goal line. So I will be doing one more video with this final result of this trade, and I hope that you guys hit that subscribe button so you can tune in to see exactly how that plays out. Until then, I will see you guys in the next video.